Hi, this is Mark from Right Line Trading. I wanted to review our trading in the live trading room today. Um, this is our first negative equity day we had in I believe almost 9 sessions. Um, this was a great break of the 50. You can see that the candle is surrounded in pink. That shows that you have order flow and momentum with you on the move to the downside. You can see that the modified 15 is pressing down really, really hard on this trade. Nice angle. The only reason I didn't take the short was it was right at the opening of the pit. Pit opened at 9 o'clock Eastern. That's when the short occurred. I thought there was a little too much volatility, so I stood aside and wound up letting a really nice short trade pass by. Now, this was a move up. Here's your move down. Retracement. Power entry short. The problem is you didn't get a two-thirds candle close below the 50, so that you could not take this trade short, and it was successful. Irrespective of that, this was not a trade that is tradable. This is not considered to be an official break of the 50. Then this trade occurred. It was a break of the 15. You see the candles outlined in pink. So you have order flow and you have momentum with you. The 50 is heading down. The color of the 15 is not important. Um, and the trade failed. And first loser, um, actually, we had a loser yesterday, but four winners. So our first trade was a loss, but it was a perfect setup. It just reversed on the trade. Now couldn't take this break of the 15. The 15 is heading down. The candle's outlined, as you can see, in magenta, but you cannot take this break because the 50 is moving in the wrong direction. And finally, we got our first really good signal. It was this momentum signal. Um, we took it long. We got 15 ticks. And we wound up with only two trades today. It was in almost 3 hours in the room. Um, we had a 15 tick winner, the 10 tick loser, three contracts. With our money management strategy, would have provided you with a $130 loss, five contracts, $170 loss. This will be subtracted from our net equity for 2014. It's posted on the home page of our website. And the NASDAQ really did not give us anything to trade today. And this is the kind of day where if you adhere to your rules and you stay conservative, you preserve your money. Although we didn't make anything, and we only had one winner and one loser, um, our loss for the day was very minimal. So really, it was really based on capital preservation. This was not a break of the 15 as we define it. The C candle was way too far off the 15 to take. You can see these are all bias dots. This is a new indicator that we have, which we will discuss at one of our upcoming webinars. Um, then the C candle, I elected not to take simply because the space between the 50 and the 15 had opened up quite a bit. But as you can see, it worked. This was good for 6 points on the NASDAQ. So that was really the only setup, and it really wasn't the most conservative entry. After that, really, there was absolutely nothing else to trade. So very few conservative setups um, that great setup on the on crude oil came right at the pit opening, and I just, it's like trading the opening of the Russell or the Nasdaq. You just don't like to get in that first minute of trading. Turned out to be a very nice trade. So even with all those caveats, we stayed safe. We waited for our setups. Finally, we got one. It fired out for 15 ticks. Really dented our full loser, and we're still running on a really nice week. And our trading days for 2014 still give us a really excellent positive equity curve. Hope everybody has a great day, and I look forward to talking with you tomorrow. Take care.